Hi folks, this is Sean Hyman from Chart of the Day, and I also run the Currency Cross Trader service. And I want to talk to you about, in the ultra short term, you can be easily thrown a curveball. And I want to talk to you just briefly what I mean by that. I was watching the RBA, that's the Reserve Bank of Australia, and they said the pace of the Australian rate rises, in other words, the interest rate increases, is open to question. Previously, traders had been thinking for sure another rate hike was coming in December for Australia. We'd had two back-to-back rate hikes. They're the only country to raise interest rates twice, and they were the first country to raise rates once recently even. So they've been a leader in a lot of areas. So overall, Australia has, the Australian dollar has been going up. Now this is a ultra short 1 minute chart. So keep that in mind. This does not show you the overall trend at all, as far as the larger picture trend that's going up like this on the daily chart. What I want to point out to you is this news came out just at 6:30 Central, which is where I am. The speech started. So you could say about 30-40 minutes or so the speech ended, which is probably around here where we had former resistance. Because remember, you do get support and resistance levels even on ultra short time frames. The only problem is everything gets so wishy-washy in the short term. That's why it doesn't really normally pay for most people to be an ultra short-term trader. I often liken it to learning how to drive a car at 200 miles an hour rather than 30 miles an hour, or 100 miles an hour rather than 30 miles an hour. When your teenager first gets in that car and learns how to drive, you don't want them driving 60 or 70 even. You want them learning how to drive at 10, 15, 20, 30, 40 miles an hour. But the faster they go, and the more they err or mess up, the more it can really wreak havoc on them, the car, anybody else that's in there as well. Many times it's that way with short-term traders and their short-term trading. And the curveball that I'm talking about is any short-term news announcements. So the speech was given here. It probably ended somewhere around in here. Because remember, these are each candle's a minute long. So they started seeing, as this speech unfolded, that the tone wasn't ultra bullish. Because remember, traders were almost pricing in the thought of another rate hike coming in December. And it doesn't mean that they won't, but it being an open question, as the central bank says, means that it's not a definitive, it's not a guarantee that they are going to raise rates in December. So that could be held off, and they could pause for a little bit if they wanted to, is what they're saying. And that caused the pair to sell off. Now, if I were an ultra short-term trader, this would be bugging me right here. I'd be down on the trade and stopped out a decent amount. Now, you go out to longer time frames and just look at the daily chart, for instance. And let me pull all this off of here real quick so you can see a little bit more clearly. The trend has clearly been up. Yeah, of course, there's going to be pullbacks within uptrends. Absolutely, they were here, 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 etc. But what you'll normally find is they're fairly shallow. In other words, the moves up are usually a lot more pronounced than the moves down. The moves down, there's less time spent moving down than there is up. All these facets make the uptrend, which also incorporates higher lows and higher highs as well. So the overall trend's been up, so the trader should be focused upward. Even when you go out to other time frames, you're still seeing, even in the very near term, we're seeing an overall upward move. Could we experience more of a pullback? Absolutely. After that news, we could experience a little bit more of a pullback, but you want to be more mindful of buying dips. So you're actually almost glad, as somebody that looks to buy, when you see these pullbacks, because when they're running away from you, usually that's not the best time to be buying. So when it pulls back within these uptrends, that's usually your lower risk trades, because it's less likely that the uptrend would further pull back on you even more. So keep those things in mind, that some occasional pullbacks can be buying opportunities. So when somebody speaks, a Fed governor, a central banker, a political figure, or whatever, and something throws it a temporary wrench to where it pulls it back some, that's okay. Use those as buying opportunities. You don't have to be quick about getting in either. Because you want to let some of these pullbacks start to pull back and turn, like this one, pull back and turn, and notice that even on this hourly chart, let me blow it up here, it takes a number of hours usually for a turn to happen and for a new upward move to resume. So don't feel like you've got to be the first one in to try to pick the turn even within a larger uptrend. Realize that it normally takes hours for a turn to happen, and so be willing to sit on your hands a little bit and wait for that turn to look like it's more in progress and starting to break upward before getting in. It's better to catch a turn up than to try to catch a falling knife, and because many times you're going to get cut, and that's what all this red is, bleeding. It's actually just downward candles, but it's easy to get hurt trying to catch that falling knife. Go ahead and let it turn, let the buying pressure resume, let everybody else come in here and take all these risks in getting it turned around. And once the upward momentum is started again, then that's when you want to hop back in and go. So as we see these pullbacks unfold, wait patiently, start turning around before you hop in. Okay, that's the lesson for the chart of the day. Thanks so much for watching.